Well, back speaking this morning with ECR's Chief Executive, Andrew Haythorpe. Andrew, good morning.
Good morning, Andrew.
Look, Andrew, October's certainly been a big month. Positive results out of Baylist and Creswick. Now this morning, news of this proposed acquisition of Placer Gold, which owns the Hurricane project in Queensland. It's an asset you're intimate with, you know it well. What first drew your attention to it?
Well, basically, there's been some recent action, at least here in Australia, in North Queensland, with regards to new gold discoveries. Separate to that, with ECR, of course, we have the Lulworth project, where there's a number of stream sediment anomalies, with visible gold, which we have now followed up, and we'll have some good news out on that hopefully quite soon. But we're very pleased with what we've seen on our Lulworth project. Then separate, to come back to answer on the Placer deal and Hurricane, a number of veins of mineralisation with 1, 2, 5, 10 and 20 grams a tonne gold rock chips have been identified in this area, literally inland from Port Douglas, in fact, in far north Queensland, for those of you who are familiar with geography of that part of the world. And these veins have never been drilled. There was one attempt to drill, and it was just a small backpack drill, which, not surprisingly, drilled 2 meters and then conked out. So that's the only drilling on these veins that are carrying this sort of grade. And like our Lulworth project in North Queensland, it's got that sort of same geological provenance, similar sort of suite of rocks, and a lot of gold prospectivity in the area. I think it's currently 41 degrees Celsius out in the field up there now. So that partly explains why not a lot of work has been done on these opportunities in the last sort of 4 or 5 decades. And that's our opportunity.
And is that part of the world, is it well known in terms of historic gold production?
Not so well known. I mean, even in Queensland, local people know there's gold prospects and gold mines and gold occurrences, in their own backyard. But if you travel as far as sort of southern Australia or Western Australia, there's no real broad acknowledgement of the golden opportunities that are still sitting in North Queensland. And then certainly, of course, in the United Kingdom and further abroad, they're even less, completely unknown virtually. And it's this combination of high geological prospectivity and, a lot of existing data, which is extremely encouraging. And the fact that not everyone's been there and had a look, which really gives us our opportunity, I think.
So back to the deal. How's it been structured, Andrew, and what's the plan over the next 10, 12 months?
Well, we think the deal's a true win-win type deal for both ourselves and the vendor. And basically, it's an option. So we're going to have a good look at this over the next 12 months in terms of all the legal requirements, all the government requirements, and of course, get a better feel for the distribution of the veins and how much gold is there. I'm hoping personally that we'll get to do some drilling on it sooner rather than later. So we have an option period and the fee where the money is effectively going in the ground, which is a terrific result for shareholders. And then if we like what we see within 12 months in due course, we'll exercise the option, which then gives us the right to buy, but of course not the obligation to buy the project, and that's for $1 million Australian in cash and shares. So we think it's a very well structured deal and a great risk managed approach for us in the company.
You mentioned the exceptional near-term development potential. Tell us a bit more about the opportunity you see here.
Well, one of the things that's really attracted me to this project, especially, and then in turn, our board and our company, is the recorded presence of veins that have been mapped, the locations known. You can go and rock chip them and see them. I've personally not visited the site, but I know geologists who have over the last 12 months. And the gold's basically there. We're sort of seeing consistent grades in that 1, 2, 5 gram a tonne bandwidth, so to speak. But then also importantly for us, vein widths are typically 1 metre, 2 metres, 5 metres thick. So when you're getting 2 and 5 metre thick veins at 2 and 5 grams a tonne at surface, I hear the sort of words economic and commercial pass through my mind immediately with those sort of widths, grades and depths being so shallow. So the real only risk we have to address is to see how far these extend at depth and how many more we might find. So it's really all upside from here, from my perspective.
You mentioned, Andrew, at the start about Lulworth. So how do you see hurricane slotting into the portfolio, given also our assets in Victoria?
Well, it's a really good fit, given that we already have the Lulworth commitment. And of course, Lulworth itself looks extremely promising as well. So, and again, that's in far north Queensland. So it's in the same sort of, let's say, global neck of the woods, so to speak. So as we move forwards, we'll, based on what we've seen already in Lulworth, we'll be doing field work and hopefully trying to identify some potential drill targets at Lulworth next year. But in the meantime, while we're going through that process at Lulworth, we've already got specific drill targets that we wish to drill in Hurricane, and it's really just a matter of waiting for the rains to ease with the tropical wet season coming. And once that access, we can get back in there probably early next year, first half, and we'll be specifically looking to drill, specifically define drill targets and see how wide and thick and deep those veins go.
Well, given the opportunity here, this clearly marks a bit of a step change for ECR. Just to round out the conversation this morning, Andrew, why do you reckon this is a good deal for shareholders, and why should investors be encouraged and optimistic on the future?
I think it's a great deal and a very exciting actual approach, both in terms of the deal structure with our ability to have a look at what we're buying before we actually buy it, so to speak, for the $1 million consideration. Secondly, the historical grades and the rock chips and what we've seen from a geological point of view. Thirdly, geologists that did actually visit the site last year, his feedback was there's a lot more veins and a lot more mineralisation to be discovered here. Just his optimistic report from a field trip that he did, where he confirmed some of the grades on some of the veins that we're talking about, but then also confirmed further potential and upside beyond that. So it just sounds like a terrific prospect, and like Lulworth, which is earlier stage because it's really following upstream sediment. You know, we're actually knocking on the rocks with the gold in them in the veins at Placer Hurricane.
A big morning for ECR. Andrew, thanks for your time.
Thanks very much, Andrew. Always a pleasure.